Hello everyone, I'm Ayşe Gülistan and this is Invest in Türkiye Talks. So what are we going to do throughout these series? We'll be talking everything related to investment, from FDI inflows to entrepreneurship, the investment infrastructure in Türkiye, and trends and challenges that sectors may face in the near future. Today, we're joined by the editor of FDI Intelligence, Jacopo Dettoni. Jacopo, welcome to the podcast.
Hi, Shigul. Very happy to be here and have this conversation.
Thank you. Now, before we talk about FDI and the world of investment, I want to ask you about FDI Intelligence. What kind of publishing platform is FDI Intelligence and what is its main purpose and focus?
Okay, so FDI Intelligence is a publication published by the Financial Times in London. We have a media platform that is made up of a physical magazine that has been coming out on a bi-monthly basis since 2003. So this is our 21st year of operation. And then obviously the magazine was the foundation stone of the title. And then over the years, we developed an online presence. Obviously, we have a website and any sort of multimedia content. We are part of a division within the Financial Times that is called the FT Locations, which is basically a division that specializes on providing services for geographies the world over willing to attract investment, particularly direct investment. Therefore, FT Location has a full suite of services, including consultancy services, data services, and many others, including editorial services, which goes back to my team and FDI Intelligence.
And how would you say your publications differ from other financial and business publications?
Okay, this is a good question. Typically, investment, when you mention the word investment, people typically think of a financial investment, so anything from stocks, bonds, options, etc. We cover everything that is not financial investment, meaning direct investment, therefore investment into tangible assets, brick and mortar assets, production facilities, new offices, new sales points, new infrastructure, you name it, everything that is direct investment into something that is considered a tangible asset. In this context, we are pretty unique. I think that there are just a couple of other publications worldwide that cover direct investment, but they are mostly focused on their own regions, whereas another layer of uniqueness, if you may, of what we do is the fact that we try to be a global publication, so we cover any geography from Asia all the way to the Americas and the Pacific.
Now, the Investment Office last year, in cooperation with another agency, held a workshop and a series of educational workshops for journalists that worked in the FDI sector, and you were one of the speakers at that training. So how do you think FDI journalism can be improved, or does it need improvement? Because we're talking about a very niche area. It's not, investment, like you said, in stocks and trade, but rather from direct investment, which has increasing strategic importance. So what would you say for journalists that are interested in this field? How can we improve the reading of FDI?
Yes, this is a very important issue, meaning that there is very little awareness in the world out there, but also in the specific field of journalism and business journalism. Very, very little awareness of the nuances of direct investment. I think that as an industry, meaning that as an ecosystem rather made up by media organization or agencies like Invest Turkey, consultancy firms in charge of working either with the policymakers or the companies or the agencies. This is an ecosystem that is mostly unknown and often misunderstood. So I think that there is a big awareness effort to be done here, and initiatives like the initiative by Invest Turkey to engage with an audience of local journalists to educate them about foreign direct investment, the role of investor promotion agencies, what they do, what they don't do, etc., is pivotal and should be done, should be replicated in many other geographies.
And Jacopo, we mentioned the strategic importance of FDI, and obviously there's a lot of talk about this, and we're going to come on to the recent announcement of the EU, the AI investment as well. So you're an editor in this field. What are the recent trends in FDI investments, and how has 2025 started for FDI globally? And what would you, your own opinion with your experience, what would you think the expectations of the remainder for the year will be?
So we, as I hinted at the beginning, FD Location has a proprietary database of FDI, greenfield FDI projects worldwide. So we are in a pretty good position to assess what is the kind of the FDI cycle, and we can do this on almost in real time. There is a bit of a lag in what we can do, but the data that we handle are pretty up to date. So 2024 was another year. Nowadays, it's very tricky to talk about like a global trend because there are so many different aspects and nuances to it. So if you look at a global picture, FDI, at least like greenfield FDI. So this means direct investment only into greenfield or brownfield projects, excluding M&A and other types of FDI. So if we look at greenfield FDI only, the data says that 2024 was a solid year worldwide, both in terms of the numbers of projects that investors have committed to, and in terms of the capital expenditure that comes along with those projects. Having said that, again, it's a very nuanced picture. We have to dig a bit deeper because things are different across geographies and across sectors. Across geographies, what we can say is that the US remains the biggest destination of foreign direct investment worldwide. And I think that the kind of industrial policies that were introduced by the Biden administration facilitated a lot of the new investment into the country. And also other big beneficiaries of those policies were the nearshoring plays in the Americas, right? So Mexico is a celebrated winner, and another few countries. Costa Rica is another standout countries in the Americas, and it's mostly a nearshore play. So companies investing in Mexico and Costa Rica and another few countries to export their production to the U.S. And make the most of the trade agreements they have with the U.S. For Europe, it was a different landscape, a more challenging landscape. It's no secret that some of the economic engines of Europe are somewhat struggling. Germany, France, the United Kingdom, they've all experienced marginal economic growth rates, and the FDI data reflect those weakening economic perspectives. Whereas if we look at it was pretty strong year though in the nearshoring area around Europe. So I think that again the nearshoring play of countries that serve as platform to export to the European Union and beyond is still a strong proposition in the eyes of for investors, particularly those countries that have trade agreements with the European Union, but also the UK and other countries. So I think it was still a relatively strong year for the likes of Turkey itself, Morocco, and others. Whereas if we look at the Middle East, it was definitely a strong year. The Middle East is kind of like there are different dynamics there. But I think that the big story in the Middle East over the past 3 4 years, from an FDI perspective, has been Saudi Arabia and the efforts by the kingdom to really open up to trade and investment and diversify its economy, which also resulted in a lot of inflows of FDI. That heightened competition for investment across the region, and countries like the UAE are definitely answering that call, and also so they are sharpening their tools to attract investment, and they've always been at the cutting edge over the past 10 15 years of investment promotion, and they are still receiving a big inflows of greenfield investment. Whereas if we look at the Far East Asia, it's the big story there is China. Foreign direct investment into China has been in a nosedive since the COVID-19 pandemic, and there are a couple of main reasons for that. At the beginning, in the aftermath of the COVID pandemic, it was due to the fact that it took a lot of time for China to fully lift restrictions to movement, and so it was very difficult also for people to move in and out, and ultimately FDI is made up by people, so this was a big constraint. And then obviously the COVID-19 pandemic triggered that whole reasoning around the diversifying and strengthening the diversification and the strengthening of supply chains. Suddenly many key industries found woke up to the reality of being almost exclusively dependent on productions in China. So there has been a big effort by MNEs to diversify their supply chains, with carrying out the so-called China Plus One strategies, if not even nearshoring or reshoring strategies. Whereas more recently, I guess it goes back to the geoeconomics angle I was mentioning, meaning that now for industry, particularly in sectors related to technology and innovation, investing in China is becoming very sensitive, obviously from the perspective of Western investors. And this is another reason why we see falling levels of inward investment into China, which is also why, by the way, the Chinese government just recently this week, they announced a new strategy to try to shore up some of these investment inflows.
So February has been a month of releasing new strategies, and as you mentioned, obviously there is that downfall in Europe, but also on the 11th of February, the President of the European Commission announced a new EU Invest AI initiative, which aims to mobilise 200 billion euros in AI investment. And you yourself have a piece written on this, and it's all, globally been interpreted as Europe's attempt to compete with the US and China. I would like to ask you two questions on this. The first, how would you comment on this new initiative, the 200 billion euros? And also, what does AI represent for investors? And what do you think are the risks and opportunities that come with that sector?
Okay, well, obviously, artificial intelligence is on everybody's lips nowadays. So first of all, I guess it's important to give context to what the mainstream narrative means when they refer to AI investment. 90% of that investment is data centers. And the reason for that is the fact that generative AI needs incredible, gigantic amount of data training for its models to be developed, refined, and be ready to be commercialized. And this training happens in these cutting-edge, top-notch data centers, which cost a fortune, at least at the moment. So from that perspective, I think that the European Union strategy or its efforts are laudable. They are obviously trying to get onto an industry that there is no doubt that will play a pivotal role in our societies, and already plays a pivotal role in our societies. I'm sometimes a bit more skeptical about when I hear about these investment commitments, it seems to me that we are losing the government narrative. Sometimes particularly on these topics, has somewhat lost touch with reality, and we are all in the midst of this race of trying to announce a bigger investment than your neighbor or your competitor, right? So a couple of weeks ago, there was this massive investment announcement by the Trump administration with that in partnership with OpenAI, SoftBank, Oracle, and a few other companies. They announced this Stargate initiative, willing to invest $500 billion over the next 4 years. And that was already something larger than life, really, because for context, I was doing some calculation yesterday. But let's get to Europe. Europe, as you were referring to, and particularly France, where the summit was held, they announced 109 billion euros, if I'm not mistaken, of AI investment into France. They didn't give a timeline, but it was an investment announcement of that magnitude. Okay, so we did a couple of calculations. It takes France normally between 4 to 6 years to attract 100 billion euros in greenfield investment across all sectors. So announcing a 109 billion euro investment in data centers, or mostly in data centers, is potentially transformative, but is also something that seems to be very optimistic, to put it in to say the least. So I think that, not to mention that there are a lot of pieces that have yet to fall into place for many of these projects to happen, right? So these announcements are based on expectations of growing demand for AI services, but they are also based on current technology assumptions, meaning that there is a template of how a data center should work, what kind of equipment it should feature, and how big it should be for the kind of AI, generative AI you're trying to achieve. But we have seen only with DeepSeek and the release of their own generative AI model that suddenly everybody was doubtful about their assumptions. There was a big crash in the stock markets. And I don't want to make too much of it, but certainly it was a moment where a lot of those kind of like bold assumptions that were underpinning a lot of these investments were shaken. I think that this is just like the tip of the iceberg. There is much more to AI that we don't know, and the industry is just like now moving its first steps as a technology for mass deployment that has to be powered by these gigantic data centers. So I think that there will be more to come, and I would expect that more to come that is yet to show up on the horizon will also make investment much more efficient, meaning that perhaps we don't need that much level of equipment for the training of generative AI models. Perhaps we don't need that much level of power or water to input into these gigantic data centers, and therefore my ultimate assumption is that perhaps we will not need that much money.
And so is it fair to say that sometimes states make these announcements just to indicate a message that they're still in the race, even though this kind of investment might not be made?
Absolutely. Obviously, it's in the world of geoeconomics, it's a big political statement as well as it is an economic statement or a statement about an economic opportunity. Certainly, there is. We are in a new kind of like the new race to the moon that happened during the Cold War between the U.S. and the Soviet Union. I think that we are in a very similar situation nowadays with AI, where the big economic and political powerhouses the world over, so the U.S., China, and in the middle, Europe. They want to be seen as leaders in this space. Now, the European Union is already lagging behind, so will hardly be seen or perceived as an innovator in artificial intelligence. But at least, as you suggest, with these kind of statements, they can at least give a feeling that there is a strategy to catch up. The risk here is that such announcements they may backfire when they don't live up to expectations, right? A wise manager that I once had, she told me once that managing expectations is the secret to any relationship. Either it be a family relationship, a work relationship, managing expectations is key. And over the years, I always found this advice incredibly valuable, and I think that it applies, at any level. So if you're a politician and you're coming out with such big announcement, you are setting a very high bar to live up to expectations. So now everybody in Europe, or at least in that case in France, but there is an expectation in the public opinion that at some point 109 billion euros will be invested in AI infrastructure. I think that, and I don't want to be too pessimistic here, but I think that considering the enormous amount of money they are talking about, they are setting themselves up for failure for some of the reasons that I mentioned. And also consider that another element that has to be considered is that big projects, they always fail to live up to expectations. And this is the nature of the fact that the bigger the project, the bigger the risks. For example, when some of the, I think it was TSMC, Taiwanese semiconductor company, they announced a very big investment project in Arizona in the US. As soon as they broke ground, they came across any sort of challenges. They couldn't find the construction workers with the skills to develop the kind of physical structure that they were looking for. They couldn't find the engineers, so it was a big kind of recruitment issue. So again, announcing a multi-billion-dollar projects is easier said than done. And so if you are a government, fair enough, you want to give the feeling that your strategy is solid and ambitious, but you also have to be mindful of the fact that the higher you set expectations, the bigger a possible fall becomes if you fail to live up to those expectations.
Now, Jacopo, before slowly coming to an end, I want to ask you a couple of questions about Türkiye in specific. Now, we mentioned that there's this global race, and obviously Saudi and in the MENA region, Saudi Arabia and the UAE are kind of racing against each other to pull the most amount of FDI. But Türkiye is in a very strategic position where it's located between Europe and the Middle East, and it's got older ties with the US and Europe as well. And recently, the 2024-2028 FDI strategy was announced by the Investment Office. And the aim there is to increase the country's global FDI share from 0.9 to 1.5%. So a more realistic goal. And as somebody that works in this sector, very aware of the global trends, what do you say for this aim? How achievable is it on Türkiye's behalf? And what do you think makes Türkiye that attractive destination for FDI?
Okay, so I think that actually we covered the national strategy, and we did some analysis around the national strategy when it came out. I think that if you look at the trajectory of FDI into Turkey, we see very strong years up until 2015, 2016, and then a bit of a dip over the course of the following years. So definitely, I think that there is the past say 8 to 10 years have been more challenging than the previous 10 years, where Turkey definitely had a very strong growth and achieved very strong levels of inward investment. I guess it's a matter of trying to address some of the internal issues that caused that downturn. And from the outside, it looks like there are clearer and stronger signals coming out of the central bank, the finance ministry. So I think that investors' confidence is being rebuilt as we speak. And so definitely I think that there is room to go back to the kind of investment levels that we saw before 2016. And I think that it's already a very fruitful starting point to achieve what the government wants to achieve in terms of the global share of the total amount of FDI that they want to attract. Ultimately, Turkey has got great benefits or great potential as an economy, and therefore also as an investment destination, because it has got two possible angles for investors, right? So the domestic market is a big domestic market, particularly for European standards, is a relatively young population. So it's definitely a good market for the production of consumer goods or industrial goods and a growing economy. And then there is also the aspect of Turkey being a platform to other markets. It's a platform to other markets both because of relatively lower production costs than, say, mainland European Union or Western Europe. And then obviously because of the trade agreements the country has with European Union, the UK, and countries in the Middle East and elsewhere. And finally, talking about the Middle East, I think that Turkey also has historic ties with the Middle East region, particularly with a few countries in the Middle East region. There have been many efforts over the years to make Istanbul a bit of a financial center for capital coming also from the Middle East. Obviously, it's a competition out there is very intense, and definitely up and coming economies in the Middle East, like the UAE or Saudi Arabia, Qatar, they not necessarily want their capital to be moved outside their countries and to be invested through stock markets outside their countries. But I think that also that strategic location, not just because of trade agreements, but also because of geographies and the historic kind of like role as a bridge between Europe and the Middle East, is also what makes Turkey very unique and very appealing to the eyes of investors.
Brilliant, Jacopo. That's all I have for you for today. It's been very interesting to talk about those global trends and then what you have to say about Turkey. So thank you very much for joining us today.
That's fantastic. Thank you, Ayşegül. I enjoyed this conversation, and thanks everybody that tuned in and is listening to this.
Thank you. In today's episode with Jacopo Dettoni, we talked about global FDI trends, the recent AI investment announcements made by the EU, and how global rivalry between China and the US may affect investor confidence and FDI in the upcoming period. You can find our podcast on all streaming platforms, and for more updates and information, follow Invest in Türkiye on social media. Stay tuned for more episodes where we'll be talking more about investment in Türkiye.